Hello traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be diving into one of the most underrated but powerful tools in the world of technical analysis, and that is specifically the 200-week moving average heat map. So we're just going to be adding that to the charts right now. The 200-week moving average heat map. All right, here we go. So if you've never used it before or only seen it in crypto cycles or whatever other cycles, buckle up. This tool can totally change the way you look at long-term price action, and trust me, you would want this one in your toolbox. All right, so what exactly is the 200-week moving average heat map? Well, as you can see, it is a long-term trend following tool that plots the 200-week moving average on a chart and overlays a heat map color, right? As you can see, it overlays a heat map color scheme to show how far price is from that average. Now, the colors tell you when an asset is overheated or undervalued, right? You can see the color scheme. This is like the legend for the color scheme. You can see it overheated being red, and cooling down. As the color comes down, it means that it's cooling down, right? So whenever you notice the color being red, of course you know that it's being overheated. And when you notice the color being purple, you'll know that it is cooling down, right? Okay, now this calculation is based on the distance from the 200-week MA. It's incredibly visual, which makes it super intuitive. Red zones usually signal overheated markets. Then as the color comes down, like I already said, when it starts coming to green, coming down further to purple and all of that, it shows that things are cold, and historically where the smart money steps in. Why is this important? Because the 200-week moving average acts like a gravitational line in the market. Price might move far above or below it. All right, so you can also see that line. Right? So price might move far above or below it. All right, you can see that when price was above it, you notice the color change compared to when the price was below this moving average. All right, so when you add a heat map, you are layering in emotional sentiment, timing, and potential opportunity. This works across markets, right? Whether it's crypto you're trading or stock indices or currency pairs, you can use this indicator across different markets. Okay, let's take an example. During major market crashes or corrections, price often touches or dips below the 200-week moving average. On the heat map, these zones flash, the purple or blue, color, right? That's historically been a signal of deep value. Now imagine combining this with RSI, MACD, or support and resistance zones. Boom, that's where you get confluence. So it's not just about one indicator, it's about stacking the odds in your favor. Right now, the 200-week moving average heat map is showing some very interesting signs. Depending on the pair or asset you're watching, we may be approaching zones of interest, right? We may actually be approaching zones of interest or hitting up to a point where caution is warranted. So if you're a swing trader or long-term investor, this is where you want to start paying attention. The market speaks loudest in extremes, and this heat map helps you visualize those extremes in real time. Okay, so here's the move. You start checking the 200-week moving average heat map regularly. You can combine it with your strategy, get familiar with its behavior during bull runs and crashes. And remember, trading is all about staying ahead of the crowd, not running with it. Okay? Meanwhile, even when taking advantage of this incredible tool, ensure to pay attention to proper risk management. Do not trade with an amount that you cannot afford to lose. Ensure that you don't risk more than 1 to 2% of your account balance in a single trade, and employ proper risk to reward ratios. Okay, for example, if you notice the signal given on the chart, if you notice that price is cooling off, remember that as the color code changes from red to orange to green to blue to purple, it shows cooling off, right? So the more it cools off, the more it presents opportunities to watch out for, right? The more it shows that sellers are likely dominating. Okay, then when you notice that the color code is changing to red, the more it shows that the bulls are dominating, right? Because you will notice that majorly when the red appeared was when the price was above this 200-week MA, right? And then when the purple appeared was when the price was below. So of course, when you pay attention to the price position with respect to this moving average, you should also be paying attention to the color code that appears on the candlesticks. All right, and then use candlestick patterns. Ensure that you use candlestick patterns for confirmation before you proceed to enter a buy trade or a sell trade. Make sure you get a candlestick confirmation to support that decision that you want to make. So even if you notice that the heat map is giving you buy signs in a bullish trend, make sure that you get a candlestick confirmation that supports that buy signal, so that you don't just jump into the trade abruptly without proper calculation. All right, and if the indicator is giving you a sell signal, maybe you are noticing the purple coloring begin to form when price is below this moving average, ensure that you get confirmation, right? Bearish confirmation candlestick patterns. Then you look for a good place to enter a trade. Set your stop loss appropriately and set your take profit appropriately as well. You want to target a minimum of 1:2 risk to reward ratio. Okay, so before you go, smash that like button, hit subscribe, and turn on notifications so you don't miss the next breakdown. Drop a comment if you've used the 200-week moving average heat map before, or if you want a tutorial on applying it to specific forex pairs. Thank you for watching. Catch you in the next video.